Hey there, Tim from AlphaWolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoyed the interview, please do us a favor and subscribe to the AlphaWolf Trading YouTube channel. Hey everybody, Tim from AlphaWolf Trading coming at you. This is one that I've been trying to get an update on for quite a while here, but between Lisa's schedule and my schedule, it's been a little bit challenging. Finally have the opportunity to do it. I want to thank you, Dr. Lisa Crossley, coming back to do this interview with me from Reliq Health Technologies. Ticker symbol is somewhere RQHTF is in Frank. And Lisa, first thing I want to do is say thank you very much for coming back and making the time. I know you're busy.
Oh, no, thank you so much for having me back. Much appreciated. And I'm glad we were finally able to make it work between our different scheduling challenges.
So a lot has happened, right? I have to tell you, I'm a bit shocked as to where the price of the stock is, but then again, I'm not. And it's not because of any execution errors on your end. It's because of the overall markets, right?
Yeah, I mean, it's a very challenging time. You know, if you look at other Canadian healthcare stocks, even not just micro cap, but the large cap stocks, they're all trading pretty much at new 52-week lows or just above. So, you know, for us being relatively stable where we are for the last little while, you know, that's something we're perfectly happy with. We're fortunate to be in a position where we're not currently raising capital. So, you know, we don't have to be too focused on the share price. Our focus is definitely on building the long-term value in this company. And I think we're doing a really good job of that. And I think that will become much clearer to the market over the next 2 quarters, you know, as they are able to get more, see more of our quarterly reporting, but also get, you know, to see more announcements about where some of these really big numbers will come from.
Okay, so well, that's already starting off with a really positive attitude there, Lisa. Well, we're going to talk too about the technicals on the stock, because you're right. A lot of companies are hitting 52-week lows. A lot of companies, and I just gave you an example before we hopped on here, of a company that's been executing and just nowhere near the company that they were back in 2008, and yet it's trading at 2008 levels. So it is not a company specific thing. This is a market thing, right? And I mean, here we're on a day, we had a big day up on Monday, we had a big day up on Tuesday, and now we got a couple of big down days, right? So there's a lot of volatility. I think in the large cap and mega cap, they're still overvalued. I think we probably have more downside ahead. But what I have noticed is that a lot of the micro cap and small caps, they're done with their huge declines. There's not much more they can go down. I mean, some of them are down 90%, right? So where are you going? You're going to zero? Unless you're going to zero, you're probably just in a holding pattern until the market figures out what it's going to do. And I do believe that this too shall pass, unless it's the end of the world. And if it's the end of the world, it doesn't really matter, because it's the end of the world.
Right.
So I think there are some fantastic opportunities. Your chart in particular is actually showing some strength, and it's pretty impressive in a very weak market, right? And that almost makes sense, because what did you just say? It's going to become more clear over the next quarter or two. So if the people that are in the know would be, if they're smart, because we're supposed to be forward-looking indicators, right? We're supposed to be looking forward, not what has happened in the past. So if you know that things are going to start to develop over the next quarter or two, it would be wise to build your position ahead of that instead of waiting for confirmation, right?
Yeah, well, you've seen, I'm sure, over the summer, I bought a fair bit in the open market myself of Reliq stock. So obviously I'm quite confident in our path forward. I think, what happens in markets like these is valuations you might in a good market get now, you get sort of 6 months down the road after you've really proven, with reported results where the company is going. So, it's the kind of market where people don't kind of give you credit for what you're saying is coming. It has to actually come and be, pass behind you and be reported before you're really seeing any sort of appropriate increase in valuation. But, for us, that's fine. In healthcare, you have to be patient regardless. It tends to be, long-term focus in healthcare. And we've always been very focused on creating a long-term viable, sustainable, high growth business. And I think we've done that. And so now we're at a point where, we're really just kind of keeping our heads down and doing the work to continue to create that value and bring in the revenue. And we're fortunate that we're not in a position where we're trying to raise money. So, we don't have to be too focused on the share price. And I think, honestly, inevitably, we have over 1 million patients in the pipeline. We know through implementation plans, we'll have 100,000 of those on the platform by the end of the year and 200,000 on by the middle of next year. So, even if there are delays related to bad market conditions, sometimes doctors are a bit slow paying their bills when their investment portfolios go down, enough that they're worried about paying off their mortgage on their yacht or whatever it is you get on a yacht, a lien, a loan, whatever. But the bottom line is that's all temporary. But the reality is, we're growing every single quarter, and 2023 is really going to be a breakout year for us. So sooner or later, no matter what the rest of the market does, I do believe that, even the most bullish market will recognize our efforts and our successes. So, we're pretty excited about the next 15 months for sure.
And that's fantastic to sit here. So you just threw a lot at us at one time.
Sorry.
But hearing that you are active in the open markets is something that I always like to see, right? It's not a matter of you just saying it, you're putting your money where your mouth is, right?
Literally anytime I get any money from anything, a tax refund, a little bit of, someone in the family passes away, anything, it goes right into Reliq for me. So, I mean, it's just, I know where this business is going, and I can't see anything else out there that would even potentially have the ability to deliver the kind of returns that this will. So I'm pretty confident about the company.
So you have, there are those out there that have tried to discredit you, tried to discredit the company, and I'm not going to even give them
dignify them by giving their name.
It doesn't matter. But anybody that maybe read something and questioned or made them question Reliq, you have done everything you said you're going to do. And the bottom line is that sometimes things take longer than we anticipate, right?
Yeah, I mean, you get COVID and all these multiple resurgences, which I'm hoping, knock on wood, especially for you, since you keep getting COVID, I'm hoping these new bivalent boosters will really provide a more comprehensive protection. But you get that coupled with a bad market, hurricanes. I mean, there's a lot the world can throw at you. But, I think as long as you really focus on the business and not kind of get too focused on, what your share price is doing, ultimately you create something that is so inherently valuable that the market just kind of has to recognize it. And I think we're pretty close to that turning point.
And I think those things that you have said you're going to do, yes, it's taken longer, but it's eventually it's happened. And I think for a while there, people were really concerned about the revenue and whether or not you're going to be able. And there was one period where, or one customer, I think in particular, that was really lagging on pay. I'm trying to think. You had days outstanding that were longer, at a longer duration, and everybody was getting concerned about the ability for you to profitably grow, right?
Yeah, we had, in 2020 and the first half of 2021, we extended very flexible payment terms to clients because they were going through a really difficult time with COVID. But we've collected all of those aging receivables, and you'll always see with us going forward a fairly high receivable balance over 90 days because we sell the hardware on 12 to 24-month payment plans. However, to
We
this
talked
point,
about that, but
yeah,
you also make a much higher margin on that hardware.
yes. Yeah, much higher than we would have anticipated for hardware. So originally I'd said, and anyone who's sort of followed us for a long time will know, I've said I never want to be in the hardware business. And that's because conventionally, hardware, you need a lot of working capital up front to acquire the inventory. You have to maintain it, keep it in your warehouse. And it tends to be a commodity business with very low margins. But we've found, because there's a lot of competition in that space, we've got a number of key device manufacturer partners who allow us to pay after the customer pays us and allow the customers to pay on 12 to 24-month payment plans. So we're able to generate very high margin revenue for ourselves. And by doing that, clients love that. I mean, one of the things that I think really differentiates us as a customer is we are very kind of white glove service. We are a one-stop shop. Anything that you want to provide to your patients, whether it's mental health management or medication management, or you're managing certain chronic diseases or asthma, musculoskeletal issues, you can do it all through our platform. And if you want to buy the devices through us, you can do that. And I've been very surprised by how many people want to do that. And so it does end up looking like we have these long overdue receivables, but those clients are paying every single month exactly as they're supposed to. So none of those receivables are aging from my perspective or from the payment plan perspective or at risk. And the most important thing to remember is we do not sell hardware at this point, and we have in the past just to keep going through the pandemic, but we won't again. And we don't sell hardware unless you've also signed a software contract. So hardware revenue leads software revenue. So anytime you see hardware revenue, you know for a fact that there will be, a few months down the line, associated software revenue that will be regular and recurring essentially infinitely. So, that hardware revenue, I know people get worried about the receivables, but to this point, about 80% of our business, maybe more, has been hardware sales. By the end of next year, it will be the opposite. So at least 80% of the business will be software and only 20% will be hardware. And so the percentage of longer outstanding receivables as a percentage of revenue will be much, much lower. Right now it looks like it's a big issue, but as software becomes the dominant product that we're selling, it's really going to fade into kind of more background noise.
So that gives great clarity, right? So that should give somebody comfort that is concerned about those numbers, right?
Yeah.
So as I was saying, we'd say you're executing. Sometimes it's taking longer, but the fact that
well, and I think another point I'd like to make, Tim, is we're audited by KPMG, and they take their job rather seriously. And they send customer confirmation letters directly to each one of our customers, not to a sample, but to every single customer we have. And so part of our annual audits is those customers confirming that they owe this amount of money that's in our reported receivables and that they intend to pay. So, we're not the only ones who are saying, this money is coming. This has actually been verified by a third-party firm, KPMG, who has their reputation on the line and wouldn't put their reputation on the line for us if they didn't have faith in what they're getting back from customers in writing. So, I think certainly it's easy for people to kind of question, are the receivables real or are they, at risk? But the reality is there's a lot of verification and validation that goes into the numbers that we report for receivables as collectible receivables, not receivables at risk. If we ever run into an issue with a customer where we think there might be non-payment, we would just report that as bad debt, which we are not doing because we have all of this verification and validation that those receivables are accurate and will be coming in or have already started.
All right, so that's fantastic news, right?
Yeah.
Let's just, I'm going to bring up one specific subject that was questioned, and that was your relationship with Cognizant. which is a $5 billion healthcare.
They're 45 billion market cap, although I should check again given the current market. But in January they were a $45 billion market cap, global company, and their healthcare business unit, which is the one that we work with, does about 5 billion a year in revenue.
So that company, 45 billion, was questioned, and apparently somebody had made a phone call to somebody at Cognizant, and they couldn't find you, and they just basically said you're a customer. And whoever that person talked to, I don't know, could have been the operator.
Well, they called their investor relations team, and what they did was refer them to our investor relations team, because their IR team doesn't get into details about any of their partnerships or, frankly, customer contracts. Their securities lawyers are even more careful than the small cap companies' securities lawyers are, and ours are pretty darn OCD. But I think the clearest statement Cognizant has made about our relationship with them is their CEO, the CEO of the entire business, not just the healthcare business unit, in their earnings call in February of this year, 2022. He actually came out and said that talked about us in the same breath that he talked about Humana. Those were the only two healthcare companies he talked about. I think most people know that Humana is a rather large 800-pound gorilla in the healthcare space. But he brought us up and specifically said that they expect their relationship with us to increase revenues in their healthcare business unit and improve profit margins. And they run a $5 billion annual revenue healthcare business unit. So if they believe that working with us is going to increase their revenue and profits in any kind of meaningful way relative to their $5 billion baseline, that should give you a really good sense of the size of the opportunity that they see here.
And that was exactly what he said, because I went and looked at the Cognizant quarterly call, and clear as a bell. If anybody has any questions, it's in the transcript. The name is spelled out. So I don't think the CEO of a $45 billion company is going to mention a customer, just a customer, in their quarterly earnings call. So the fact that it was clearly mentioned, and as you say, brought up with Humana, should tell you something. And if it doesn't tell you anything, that's fine. That's okay. Sometimes people don't see everything until it really hits them in the face. But I think there's some really exciting. There's an exciting future here, and we might be early. But that's usually when I like to be involved in something, is early. Right? I really don't want to be trying to chase it after it becomes apparent to everybody. So this is an exciting story all the way around. It's a feel-good story because of what you do. You make the patient experience better, quality of life better.
Right? I mean, we really do drive better health outcomes. I mean, we've had patients where, I think it's not exaggerating to say we probably saved their lives by alerting their doctors. We had a patient who doubled up on their blood pressure medication. Their blood pressure plummeted, and the doctor received an alert and was able to send the patient into Emerge to get, they call them vasopressors, things that stimulate blood pressure, and to try to bring the blood pressure back up. Because what normally happens with those patients, because this is not uncommon in the elderly chronic disease patient population, that they'll forget to take meds and then double up on them. And what normally happens is, their blood pressure plummets, they fall, they get either a head injury or a broken hip, and you're looking at a really dramatic, event in their healthcare path. So they end up in hospital for very long periods of time. Sometimes they come out and they're never really back to the level of health they were before. So little interventions in the home can really make a dramatic impact on health outcomes, and that obviously translates to quality of life for the patient and for their family.
Right. And if you save one life, I think that's pretty amazing, right? And I think you probably do that more than
that's just an example. It's very meaningful to me. At this stage in my career, I could probably work at just about any company, not that just any company would hire me, but I could work in any sort of industry that I find interesting. But I'm really passionate about what we're doing here. I think we're fundamentally changing the way healthcare is delivered, and I think it's absolutely necessary, this change. And Medicare and Medicaid obviously agree, because they've continued to increase the scope of their virtual care programs and the reimbursement levels. But care in the home, that's the safest setting in which to deliver care. You have fewer medication errors if you have, either a medication dispenser or a family member helping a patient than in a busy hospital where nurses are delivering medication to, dozens and dozens of patients all day long. You have much lower risk of catching the flu or COVID if you're at home versus in the hospital, and you have a much, much lower risk of catching MRSA or other antibiotic resistant microorganisms that are really becoming a significant issue in the hospital. So, it's definitely the safest care setting, it's the cheapest care setting, and it's the one where patients are happiest. Your grandmother's going to be much happier in her own house than in a long-term care facility or skilled nursing or hospital. So I think this is the future of healthcare. It's not going back the way it was. And I think that's very positive for everyone. It's going to make the healthcare system more sustainable. It's going to bring down healthcare costs, and it's very beneficial to patients. So I'm really passionate about what we're doing.
And that's another really important thing for me, right? Is seeing the passion, and I feel that from you. I felt it from the first time that we spoke, right? I mean, you kind of gave me goosebumps a little bit, right? I mean, and that's I
can be a little too passionate sometimes, but yeah.
No, I think it's fantastic. So you mentioned the fact that you are not going to need to go out to the markets to raise capital. That's it. That is something that I guarantee you is a fear for everybody, right? Because in this market climate, and I speak with CEOs that are going to have to raise capital, and they're not sleeping right now because it's going to be a shitty deal. Excuse my mouth, but that it's going to be a bad deal. They're not going to get. It's going to be extremely dilutive to the shareholders. It's going to have warrants or whatever else attached, and it's not going to be a fun ride for those that are current shareholders. So if that is,
and our cash collections are really starting to accelerate now. And beyond that, we actually have about 6 million warrants at 30 cents. That will be expiring in the middle of November, and there's 2 tranches, middle of November and early December. And from speaking to the warrant holders, we're expecting to get all of that in. So we'll get a little, infusion of cash, as a pre-Christmas present, so through the warrants. So that's a positive, and it's always welcome right before Christmas. So.
Right. No, and that's fantastic, right? So hopefully. So I think your next quarter is what, November 1st or so, first week in November when you report?
So we'll report our annual audited financials October 28th. And we're wrapping up the audit now. And then we'll report the quarter ending September 30th, end of November. So, when we are reporting the annual audited financials, I really try not to spend too much time on those, just because, you're going back 7 months to April, May, June, with a company that's growing as rapidly as we are. That's eons ago. It's just doesn't give you any kind of indication of where we are now. And as we'd mentioned, the Omicron wave in November, December 2021 and January, February 2022 had a very significant impact on us. I mean, part of it was if patients are sick enough that they need acute care. So if they have to go to the hospital, or, home health nurse or a respiratory therapist has to be sent into their home, then their clinicians can't deliver the preventative services that we enable. So the clinician can't bill and we can't bill. But the bigger issue for us, honestly, was that Omicron wave swept through our clinicians like nobody's business. I mean, we had so many of our clinicians were down for some period in, the Q4 of 2021, Q1 calendar of 2022. And if a clinician goes down and can't do the few things that they're supposed to do on their end, then, you don't just lose one patient for that month, you might be there 3,000 patients. So, luckily that we got past that, that impacts Q1, Q2 results calendar for 2022, as I discussed when we were reporting Q1, but it's not an issue going forward. So I think you'll see a difference in the quarter ending September 30th. And certainly from there, every quarter going forward is going to show really dramatic growth relative to the preceding quarter. And I think we've diversified the business a lot since, even the beginning of this year. So we're not as sensitive to things like COVID outbreaks in certain geographies. We're in much broader geographies, and we're also working with patients beyond just the most vulnerable chronic disease elderly patients. We're working with clinical trials patients under the new billing codes for musculoskeletal care and respiratory care. Those tend to be younger patients. And next year, Medicare is introducing new billing codes for pain management. And that really gives us a very broad age range of patient that we'll be working with. So we continue to diversify. And I think all of that diversification, geographically, in terms of the kinds of conditions, and we're now working with some private pay patients, as well as employer-sponsored health plans. All of that really gives us more insulation from blips like, an Omicron wave that we didn't have at the beginning of the year, or even in the first half of the year. So I think the business is becoming much more resilient as we grow.
Well, you see, that's one of the things that does excite me, is that we have been through a pandemic, which, as far as I know, there haven't been very many of them, not in my lifetime.
Nope.
Right?
Nope. Usually once in a lifetime, that's what happens.
Yeah. If you can work your way through that and become a strong, my question to you, Lisa, is, are you a stronger company today than you were 6 months or a year and a half ago?
Yeah. Good Lord, yes. We definitely are. I mean, when we came out in 2017, 2018 and started doing this, we were all really passionate about trying to help patients. Reimbursement levels were really very low for clinicians at the time, but we found a few clinicians who were willing to kind of, do something altruistic that wasn't going to make them a ton of money, but that was going to help their patients. And then it was just the killing fields for any companies in the remote patient monitoring space that year, because when clients started making claims to Medicare and Medicaid, they were coming back rejected, and the criteria were changing as they went. And I think we were one of very, very few companies who stuck it out past that point. And so from 2018 on, we really became experts in all of the Medicare Medicaid regulations in terms of who qualifies. We implemented our own, and we do pre-authorization. So we actually go out and electronically secure pre-authorizations from Medicare and Medicaid for every patient that we put on the platform, instead of relying on the clinician to parse the Medicare and Medicaid rules and make sure the patient really is eligible. And we implemented the electronic claim submission so that really speeds up for the clinician getting reimbursement. And we grew along with that market. So every time Medicare and Medicaid introduced a new billing code, we would add a module into our platform, like behavioral health integration for mental health care and addiction management. And so we've developed something that really meets the needs of the community care space in a way that we probably couldn't have even envisioned when we first started out. And since even just the beginning of this year, we've diversified geographically and in terms of conditions, and we've made it through some pretty dark times with COVID. Not just what we went through in 2018 with the Medicare Medicaid confusion, but then 2020, beginning of 2021. I think the fact that the company was able to keep going, keep moving forward through all of that, and now is at a point where I think we're really poised for some very impressive growth. There's no question we're battle tested, and we've identified any weak spots and really strengthened the business. So I think we're in a really good position moving forward.
So this is a feel-good story to me, right? And
me, yeah.
I look at everything in terms of risk reward.
Yeah.
And as I look at the company now, I think when you and I first started talking, and I'm gonna pull it real quickly.
Okay.
I just want to, how many shares fully diluted outstanding are there?
At the moment, I believe we're around 187 million fully diluted. And we do intend, we're going to be throwing off a lot of free cash in 2023. And I am very committed to a share buyback program. So, I think we plan to combat some of the dilution that's happened over the years. But, I think.
Okay, that's a good little tidbit that you just shared there.
Well, I've said that publicly before. So, no worries. I'm not
I know. But
speaking
that
out
was
of school.
it's a good reminder, right?
Yeah.
The plan hasn't changed. You're not deviating from the plan.
Right. Yeah.
Okay.
I mean, of course, we'll always, first invest profits into growing the business more quickly. But there are, constraints in reality. You can only grow businesses so quickly. So, you can't really go from $1 million in revenue to $1 billion the next month. And there are just too many operational constraints around things like that. So I think we will definitely have free cash available to do a share buyback. And that's something that we definitely want to do.
All right, so let's talk about the chart. I know that this isn't exactly your
That's
forte,
not my area, no.
Right. But and when you and I first met, this was kind of in consolidation mode between basically 65 cents and up to $1. And the buck is a big area, right? I mean, you get back above $1 or you get above $1, that will be a big moment where you close above $1 and that becomes the new floor, right? But you were kind of bouncing between this area, and I really did not, because everything that you had going on, I really felt as though, this area was gonna hold as support because you kept bouncing. But then the market did what it did.
Yeah.
And you wind up breaking that area of support, and then it came back down. But here's what I find very interesting. This is the long-term trend line. Now, I haven't touched this thing since you and I spoke the first time, right? And if you look at where this thing came down to, it literally kissed that trend line and bounced right off of it. So it could have gone back into underneath that trend line, and you could have resumed that long downward trend. But that's not what happened. It kissed it, it bounced, and now you're kind of in a consolidated. This could be classified as like a bull flag, right? So it's and it looks like maybe 35 cents is acting somewhere in that area. 35, 36 cents is acting as support. Now you could continue to consolidate sideways. You got the 50-day moving average there as well. So it's the EMA, not the SMA, in case any tech guys are trying to double check my stuff, but it is right there hugging up against it. And I think what's interesting about this consolidation that you have, and then listening to you saying, in the next couple of quarters, I think people are really going to start to understand the picture. If you are aware of what's happening within the company, you have faith in the company, you have faith in Lisa, then this is an opportunity to buy, right? And add to your position. And maybe you're down from the 60 cents. I was. What did I do? I added to my position.
Me too.
Right? Because I have faith in the long-term story. I don't think this is a fluff. I don't think this is a pump and dump. I don't think there's a fake relationship between you and Cognizant. I think that there are real substantial reasons to believe in the company and support the company because you're doing great things, right? So this is an opportunity from a risk reward standpoint. Okay, what is my risk? I lose. I mean, I guess you could go bankrupt and then I lose 36 cents, or this is the beginning of a really intense growth period. And, I think the population continues to age. I think, there's going to be, I know for a fact, I'm going to the doctor tomorrow. Not that I want to, I have to, right? So that's what happens as we get older. So, and one of these days I'm going to need somebody to help me out around the house. I mean, this is the way it's going to be. So I look at that and I think there's tremendous opportunity ahead for the company, right? And like you said, we're not going back to the antiquated ways of doing things. We're going to go back to making things more efficient, right? For the hospitals, for the patients, making them feel better about their quality of life. Why would you go back? Right.
Yeah. When you're saving a huge amount of money and patients are happier, that's not something you can reverse.
Right. You'd be pretty stupid if you tried. So I think this is tremendous opportunity. I think, where do you want to, I mean, you're going to have resistance. What was resistance above, what was support above will become resistance on the way back up. So I would expect maybe you get some resistance in the 50 to 80 cent range. You're going to have probably some resistance there. And then of course, you're going to have the big resistance at the dollar mark. But
Yeah.
once you break above that dollar, and then that dollar becomes support, that's when things are going to get very, very interesting, right? Especially for the technical guys. At some point, and we've talked about this before, and I loved your answer before. I asked you about up listing to the NASDAQ,
Mhm.
and you said yes, at some point that would be wonderful to have happen, but that is not your priority, right?
Yeah, I mean, it's not our priority in terms of, would we right now do some kind of crazy reverse split to get to, $5 so that we could uplist? No, never. We wouldn't. We want to uplist to the NASDAQ at a point where we're a mature enough company that investors who are looking for stocks on the NASDAQ see us and recognize the potential. So, I think particularly in this market, you want to get a couple more quarters reported before you're really going to be, for Reliq, before we're really going to be, a good candidate for the NASDAQ. But I think that'll happen relatively early in 2023, organically, that we'll get to the point where I think we will feel really comfortable moving ahead aggressively with the NASDAQ uplisting. So, we're going to do it when the time is right. And I think that's what's best for companies in the long term. If you uplist early, you definitely risk kind of dropping back to your pre-reverse split share price, which may be a tenth of where you started. So, that's not good for shareholders. A lot of people really push a NASDAQ listing right now because there are short-term gains that will sometimes come out of that. But we are not really, the right vehicle for the short-term investor. There's lots of companies out there that probably are, but we're very focused on creating a really solid, viable, long-term business that's going to create tremendous value. So we're not going to make short-term moves that I think will hurt the company in the long term. So,
and that is fantastic to hear, because here's the reality of it. Yes, I know OTC can be hell, but the NASDAQ can actually be worse if you're not firing on all cylinders. If you don't have the wind in your sails and you uplist early, you will spend the next year to 2 years trying to stay listed on the NASDAQ. All of your efforts will be going towards how do we stay listed, right? And if you did a reverse to get there and you wind up going back below $1, that's not it's just not fun, right? So I think it's much better to go there because the growth is there. It's clear that this company is solid, and it's the right move to the NASDAQ because you're ready, right? I mean, that's the thing. And that is what I hear from you. I don't hear, hey, we got to get out of the OTC just to get out of the OTC so we can get to the NASDAQ. That's not going to solve all your problems, right?
No, but I think when we do uplist to the NASDAQ, when we've reached that point where, we would qualify on our own and we have a really, solid, robust business with enough history that people will understand it, which is, I think, still coming in early 2023. It's not like there's a long time to wait. But I mean, at that point, I think we'll really flourish on the NASDAQ because we'll continue to have great announcements. We'll continue to be showing very impressive growth quarter over quarter. We'll be profitable, So I think waiting until the time is right, and the market will reward you as a company long term for that. So, you may not have those little short-term gains or short-term excitement, but I think waiting until it's the right time is definitely the right thing for the company and for its shareholders overall.
I completely 100 wholeheartedly agree. So I want to real quickly, if you're not familiar with the Reliq story, right? There is on the investor relations portion of the site, there are all kinds of videos here that really kind of lay out everything that you guys do and provide. And I think they do a really good, accurate description of what the company is all about, right? So I think if you're considering the company, if you're considering dipping your toe here, I think this is a great place to dip your toe, right? I think the risk reward here is great. I mean, even if it just goes from 35 cents to $1, that's, and if so my risk is it goes to 0 and I lose 35 cents, it goes to $1, that's a 2 to 1, right? Do I think it's only going to go to $1 over the long term? Hell no. I mean, I'm not looking for 30 to
Right.
$1. I'm looking from
Yeah.
30 to $5
Mhm.
or more.
Yeah.
Right.
Yeah.
That's what I'm
Yeah.
looking for. So
Yeah.
this is, I think, a golden opportunity. I think the overall markets, but the small caps and micro caps, the ones that are consolidating right now, to me, they look like they're building a base. The most of the pain is gone. It's done. Right. And at some point, the market is going to turn. And when the market turns, these are the stocks that I want to be in, the ones that have grown their business, strengthened their business through some very challenging times, right? I mean, very challenging times.
Yes.
So, and it's just made you stronger. What doesn't kill you makes you stronger,
That's
right?
right.
And I truly believe that. And Lisa,
Yeah.
you've taken some slack, but
Yeah.
you will prove to be.
Yeah.
I mean, that's part of the game. Everybody likes to bash. There's
Right.
always these bashers that just don't seem to really fully comprehend the whole story, or just like to see all the negatives.
Yeah.
I'm personally not that way. I like to look at the positives.
Yeah, I mean, I'm all very supportive of skeptics. I think it's really important to be skeptical in the stock market, and really do your due diligence and everything. But we always say, if you're not comfortable coming in now, wait a couple of quarters. I mean, we know that in a couple of quarters, everybody's going to be dying to get in. So, wait till you're at your comfort level. But certainly, if you're, more risk tolerant. My parents, one is extremely risk tolerant and one not at all. So you got to figure out where you are on that spectrum and decide at which point you're going to jump in. But certainly I've jumped in with both feet, and I'm probably less risk tolerant than my mother. So closer to my dad, who's not at all risk tolerant. So I think we are very happy with the way the company's going. And if investors want to wait a couple of quarters to really see the evidence of that, that's not an issue for us. And, we encourage people to make their own investment decisions for sure. But I do think this is a really good opportunity right now. And, we're pretty excited to show people over the next several quarters, how high this can really go.
Well, I'm looking forward to seeing the story continue to develop. So, I think this is just a follow-up. Like I said, if anybody wants to really get a good, deep understanding of what it is, go to the investor portion of the website, watch the videos. You've now got a good feel for Dr. Lisa Crossley. I think she's pretty stand-up and straightforward and very transparent. So, I didn't have to twist her arm to come in and tell her story. She's excited to do it. You can see how passionate she is about the industry, about what they do. I defy anybody to find negativity here. If you can, then you're just a negative person in general. I don't even want to know you. So, Lisa, keep doing what you're doing. I think you're doing a bang up job. You and your team. I mean, I know it's not just you.
No, it's definitely not just me.
Right. And we'll revisit this maybe after the holidays coming up. Maybe we'll do it right after the first of the year, right? And just kind of see what's happening. But thank you so much for taking the time.
Oh, thank you so much for having us. Really appreciate it.
If anybody's got any questions, specific questions, you can either email me and I'll forward those over to Dr. Lisa Crossley. She gets back to me. I got to tell you, man, right away. I mean, I always get a return immediately. So as busy as
I don't
you are,
sleep, so it's easy for me to be responsive.
All right, Lisa, hold on one second. I'm gonna unless you feel as though I missed anything. If there's anything you feel I missed.
No, I think we really hit everything. Yeah.
Okay. All right. I'm gonna stop the recording here, but hold on for 1 second.
Okay. Yeah.
Hey there, all you stock market junkies. Thanks for tuning in to yet another interview here at AlphaWolf Trading. Before I go on here, I want to make sure that you understand, if you're not ready to buy Reliq, I do encourage you to at least put it on your watch list. Pay attention to what's happening with this company. Today we had CEO Dr. Lisa Crossley with Reliq Health Technologies. I hope you enjoyed today's interview. The ticker symbol is RQHTF. If you did enjoy today's interview, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. AlphaWolf Trading wishes you the very best of success.